Welcome to the Alan Berry Reports TV show. I'm your host, Alan Berry Labucan from the AlanBerryReports.com. Excuse me. Thank you very much for joining us today. We're going to be having an installment of our market commentary today. Lately, we've been doing a lot of in the news shows, mainly because the various companies we follow have been putting out a lot of news from their summer work programs and been really busy with that. And so we've had a lot of news to talk about. Today we want to go into some market commentary. We're going to talk about stock markets, currencies, and commodities. Before I get started with that, though, I wanted to send out some thank yous. First of all, we have, we put this show out and we use Ustream and YouTube to record and broadcast these shows, and also then that makes it able for us to put them on our website. And so YouTube and Ustream are where we not only do we use them to broadcast, but we also use them to record. So after our show goes live on our website, once we put the show up on our website, then when we have a new show out, we put our past shows on our Ustream and YouTube channels. And so that's a really good place to go look for our past shows. You can find links to them up above us here on our website. And so thank you very much to the folks over at YouTube and Ustream for having great websites and good platforms to produce these shows. In addition to that, we also have to thank our banner sponsors. If you look to the left and right here of us on our website, you'll notice a group of banner sponsors. They help make this show possible, and if you'd like to do your homework on those companies, just click on their banner and that'll take you over to their website where you can check out all their news and other information to understand what those companies are working on. And then most importantly, you the viewers, we wouldn't have this show without you, so thank you very much for joining us. So we'll get on to our market commentary today. And before we start that, I want to do some housekeeping. And in addition to recently changing our website and adding this video player, we've also done some other changes, and we're putting out more shows more often. We're shortening them up a little bit, trying to get them under 15 minutes. The best place, some of the places you can go to when we have a current show, we put it up on our website. Then when the next show comes up, we put that show up. Then the place you can go and find our past shows is if you go to our blog. There's a link up there. We have detail. We outline each show. Each time we put a new show out, we put the links to how to find the show and the dates and the titles and everything. So you can go to our blog. Again, YouTube, Ustream is where all of our past shows will be located, in addition to finding them on our blog. And then on our website here, if you look below the screen, you'll see some text there. That's our sort of update section, and whenever we have shows, we sort of do a little blurb about the show and then links to those shows. So the first time we note the show, it will only say that there's a new show in the player above, and then we move that show and we have links below that. So that's another good way. And then if you look on the bottom left corner, you'll see a little navigation bar, and inside of there we have forward and backwards. Basically what we're doing is, since we started updating our shows on our website more regularly, you can sort of scroll through the various different shows. They're all down there, so you just click on the next and it'll take you to the previous show that was posted on our website. So now that we got the housekeeping and all the thank yous out of the way, we'll get into our market commentary. And today we're going to start with the stock markets in general. Back in the early part of this year, we did our Outlook 2010. And in the Outlook 2010, we talked about, sorry, I'm just trying to find the easiest way to get you to that. I'm just pulling up a couple websites here quickly, and sorry, this one's going to cause some audio to come on. Oh, we're okay there. So our Outlook 2010 was actually our 27th edition, which we put out on January the 26th. So if you go to above me here, you'll see a report section. In there we have all the past reports. If you want to see our Outlook 2010, which also had our review for 2009 calls in there, just look for the 27th edition. Okay, so in that edition of the report, what we did is we did our outlook for 2010. We talked about our calls for several different assets. One of those calls was we talked about stock markets in general. We talked about the Dow Jones Industrial Average and the S&P 500, as well as the Toronto Stock Exchange and the venture market, which is covers more junior mining companies. In the Dow Jones Industrial Average and the S&P 500, what we were looking for was a sideways trend. And in a sideways trend, you're going to get it come up, it'll come down, it'll come up, come down, come up, come down. But basically, you know, it's going sideways. Yeah, you have some rallies and some pullbacks, rallies and pullbacks, but in the general sense, the market's going sideways. That was our call for the Dow Jones and the S&P 500. It's been right on track with that kind of a trend. We expect that trend will continue. Our call was for the Dow and the S&P to end very close to the levels that they started the year. I think the Dow started the year around 10,500. That's the number we picked for the end of this year. We think it's right on track. You know, it's sort of at the top end of the range. The range we talked about was 11,000 on the top and 9,000 on the bottom. It's up near the top right now. You know, it's probably ready for some profit taking. That'll bring it back down into that that sideways trend. You know, we're not expecting a lot of really big rallies towards the end of the year. You've got elections coming up, and both parties are sort of pointing fingers at each other. Well, they're the cause of the economic calamity that happened in 2008, and their ideas aren't going to work. Both the left and the right are pointing fingers and saying how bad things have got and whose fault it was and what our plans are. And when politicians are yammering like that, we don't think that it's going to cause a lot of investor confidence. And so we pretty much think that that call we made at the end of beginning of the year is going to, it has played out throughout the first 9 months of the year. We expect it to continue for the last 3 months and end very close to where it started. On the other hand, you look at the Toronto Stock Exchange and the Toronto Stock Exchange venture market. Those markets are very tied to commodities. Plenty of big and small mining and oil and gas production companies are on those two exchanges, and so you know, the Toronto Exchange and the TSX Venture are really tied to what's happening with commodity movement. And our call at the end of the year was for those to be in a bullish trend due to the trends we felt we would see with commodities. We're going to talk about those later, but nonetheless, it does affect these indexes, these markets, and we have been seeing a very bullish trend for commodities, and that has been bullish for the Toronto Stock Exchange and the venture market, and we can think that will continue. And so we're right on track with our calls for the markets. Really happy with that. The next thing we're going to talk about is currencies. The main currency that everything sort of revolves around is the United States dollar. The United States dollar has been in a long-term bearish trend. It's had a short-term rally in the beginning of this year. Part of the rally, it rallied against mainly against the euro, and why it did that was At the beginning of the year, there was a lot of concern regarding Europe, possibility of sovereign debt defaults and stuff like that. And so the U.S. dollar got a rally during that period, and but the fundamentals of why it's been on a long-term bear market are still consistent. You've got rapid deficit or aggressive deficit spending. You've got rapid growth in the overall debt of the country to spur the economy. In the last couple of years, has been printing a lot of U.S. dollars. So there's, in a general sense, try to look at everything like a commodity, and as far as the fundamentals of the U.S. dollar are not looking good, and then when you've got ample, abundant supply, and I think suspect demand going forward, that's a recipe for a bearish trend, and we think that's going to happen with the U.S. dollar. And at the beginning of the year, in our Outlook 2010, we thought that currency traders would be much better off in commodity-related currencies like the Canadian dollar, the Aussie dollar. They're doing very well. Even when the U.S. dollar was gaining some momentum, the Canadian and Aussie dollar were performing quite well. Now that the U.S. dollar is starting to resume that bearish trend, the Canadian dollar and the Aussie dollar are doing very well. So we think we're in good shape with that call as well. Now we're going to get on to the commodities. Some of the things that we're seeing in the commodities is, we got the gold trading at record prices, the silver doing very well, trading near multi-decade highs. You got the copper trading very well. These are all long-term trends that are related to supply and demand. With those commodities, we've got weakness in supply that has come from many years of underinvestment in exploration to find new deposits. This is, and because of a few decades of doing that, the supply chain for many commodities are very ill-prepared for future demand from developed economies and emerging economies, and that hasn't changed. Even though these prices are at highs, the supply is still weak and demand is still strong. So, I mean, in a general sense, when things run up quite dramatically, you could always see some dips, but those dip in a bull trend, those dips are usually short-lived, and the resumption of the bullish trend is usually doesn't take very long to get going again. And so we're looking for, we called for a fairly bullish call on both, or on all those commodities, gold, silver, and copper. And at the beginning of the year, and we look like we're on trend to hit those numbers. So we're very happy with that regarding commodities. Now, another thing that's affected by commodities, of course, is resource stocks. And with resource stocks, they're also doing very well. And we're starting to see a lot more takeover activity in the sector. A lot of that has to do with, again, going back to the underspending in the supply chains, not enough work, not enough new discoveries. Majors have to go in and take over juniors and find their reserves with the checkbook. We expect that to continue as well. And so that's a wrap on today's market commentary. Before closing, I'd like to stress that this show and our reports are for information purposes only. We aren't making buying or selling recommendations. It's important for you to discuss this with your financial advisor before making any investment decisions. We're always trying to grow our audience, and any effort you make to help us with growing our audience, letting your friends know about the show, we'd really appreciate that. We also appreciate you taking the time to watch this show. We know everybody is very busy these days, and thanks a lot for coming. Next show, we're looking for our next show to be on Tuesday. We're going to have another In the News segment. We hope you can join us for that. As always, you can find all of our work at allenberryreports.com. Have a great day.